Welcome to Short View Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. This is your morning market hit. It's around 9 a.m. London time. So if you want to trade equity index futures, you want to go long or short, the FTSE, the DAX, the S&P, other equity index futures, how should you go about it? What factors should you think about? What should you take into account as you go about making your decision whether to go long or short on that 1 to 2 week time frame? That's what we're going to get into in this video. And the first thing you need to do is contextualize the market. How's it been trading? What's the price action like? How has it been behaving in the last few weeks? Because at the back end of July, in the second half of July, the market sold off very aggressively. We saw both the Nikkei and the Philly SOX, two indices at the center of that weakness across the global stock market in the second half of July. Both of those indices fell 25% from their highs in July through to their closing lows in early August. In fact, the Nikkei itself on Monday, the 5th of August, was down almost 13% to the intraday lows just on that single trading session. So there was dramatic weakness. We saw it in the Nasdaq as well, which sold off by 14% over the same time frame. There was dramatic weakness in the second half of July. But since then, the markets have become much calmer. They've been rallying sharply. In the last 7 to 9 trading sessions, they've been up quite meaningfully, bouncing aggressively. And in fact, last week, we saw one of the best weeks in the S&P 500 and the Nasdaq for a long time. The S&P 500 bouncing almost 4%, its sharpest 1 week bounce since the back end of 2023. The Nasdaq similarly up sharply around 5% on the week, its best week since the back end of 2023. And indeed the Philly SOX itself, one of the center of weaknesses in the back end of July, bounced almost 10% over the course of last week. So what should you make of that? If you're a 1 to 2 week trader of equity index futures, what should you make of the fact that the market's rallied pretty much in a straight line for the last several trading sessions? Well, we would come back to the way most sell-offs happen. The majority of sell-offs operate in 3 waves. That is, they have an initial wave of selling, where the market sells off sharply and makes its wave 1 intraday lows. That's what we saw in the back half of July into the August the 5th intraday low. Then you get a relief rally, you get a bounce. Markets bounce, they retrace a big portion of their losses, they rally quite hard, they generally rally further and more than people expect, and the mood changes from one of panic at the bottom of the wave 1 low to one of complacency and all is fine by the end of the wave 2 relief rally. And then typically you get a third wave, a wave of selling back to the intraday lows put in at the bottom of the wave 1, or indeed even lower. That's the typical pattern you get in pullbacks, the 3 waves of selling. And the majority of pullbacks operate like that, particularly when they have a very aggressive wave 1 of selling, as we saw in the second half of July, and as I mentioned in the Nikkei, the Philly SOX, the Nasdaq, and also of course in the S&P 500 itself. So the question becomes, how do you judge between those waves? How do you judge when to switch from expecting a wave 2 to a wave 3, to when to switch from being long to going short for that wave 3 of selling, and vice versa, wave 1 to wave 2? Well, one of the key inputs we use to judge that switch from short to long and long to short is our short-term market timing models, the 1 to 2 week models that we update each and every day in our daily RAG publication. Like, for example, this risk appetite scoring system. This is a measure of the market's, the global market's fear and greed. When it's on buy, it's telling you the market's quite fearful. When it's on strong buy, it's telling you the market's extremely panicky and fearful. And then, of course, when it's on sell, it's greedy, and strong sell, super greedy. And this model picks up nicely the 1 to 2 week movements in equity indices. It's not perfect, no model is. You can see it went to buy a little bit early in that pullback in late July, and then eventually got to strong buy quite near the lows before the relief rally began. Now, of course, it's pretty much back on sell. And that provides us one of our key insights into thinking about whether we go long or short. We blend that with things like a technical scoring system that I'm putting up in front of you now, the one of the Philly SOX and the Nasdaq. Again, a little bit early on the buy signal in the pullback, but doing nicely otherwise, picking up those 1 to 2 week swings, and another model that's back on sell. So we take these, a whole variety of other models. We look at fund flows, put to call ratios, volatility, VVIX and VIX and so on. And so you get that in our market feel each and every day in your inbox around 9 a.m. London time if you're a subscriber. Or if you'd like to take a free trial, please click on the link below. We'll send you the daily risk appetite publication for free for a bunch of trading sessions so that you can work out how to blend it into your approach to trading equity index futures. So what are we watching today and this week? Well, it's all eyes, of course, on Kansas City Jackson Hole Economic Symposium, the annual shindig over in Jackson Hole where central bankers around the world and other monetary policy wonks get together and discuss the outlook for interest rates, the outlook for monetary policy and a key issue. Most critical amongst that, of course, is Jerome Powell speaking on Friday. He'll give some sense of where interest rates are going over the course of the next few months. That's a critically watched speech. That'll be the most important event most likely this week. Elsewhere, there's lots of other stuff going on. We have a couple of other central bank meetings. The PBOC's got a decision along with the Swedish Riksbank. And then, of course, we've got flash PMIs later this week and some Japanese CPI, which matters given what's been going on in the yen. Price action elsewhere, very important. The yen, critical. Bitcoin, keep an eye on that. It's a good liquidity indicator and what the S&P, Nasdaq, Nikkei, etc. get up to. So that's it from us. That's your morning market here. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click the like and subscribe button and share on social media or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe. Trade well.